Hi everyone, this is Dan and the future holds crypto. So it's it hasn't been a very good time for crypto in the past few weeks, and yes, of course, depends on where you stand. Some people see this as an opportunity, but I believe the percentage of that population is really small because it has been a very big dip, especially well, actually in all crypto, and nobody actually expected it to some degree. There were a few people that saw a week of pattern forming on the chart even a couple of weeks or months ago, but even I believe that not even them were believing that this was happening because everything was so bullish at that point. So wanted to go through a couple of things because yes, Bitcoin kind of did something that is a first from some perspectives, and people are already thinking about the bear market, and this was it. This is it. We are going to a multi-year bear market. And I want to say a couple of things about that. I'm going to try to keep it short. But long story short, well, while of course there is a risk for that, and it is always a risk because what I've said in the past in the previous videos, it's very hard or mostly impossible to catch the bottom or the top. So yeah, that is a possibility. However, I don't believe it is the case now. So I'm gonna go through a couple of things on the chart, not only on charts, but there are a few things that don't add up. So okay, as we discussed in the previous video, people were blaming Elon Musk, and I believe that, well, while he probably had a part in it, he was not the major reason behind it. It coincided very well with the inflation calculation or announcement a few hours before his tweet, and the market with the irrational response of the market, which also influenced Bitcoin. And then the weeks after, or the days after, when Bitcoin crashed hard, it's mostly due to China's ban of Bitcoin. And yeah, it's they did ban it yearly on a yearly basis or something like that. But in this case, I believe it also involves mining, and some exchanges were, for example, last weekend, not this one, the previous one, um, generated a big dip as well. But well, it was not a lower low; it was actually a higher low than the previous one. But it was generated by the Huobi exchange, who panicked and stopped some crypto services and mining in China. So that's people moving capital from one place to another, probably. But um, besides that, I believe the fundamentals are still here. I don't believe this is the end of the bull market. And if we look at the chart, for example, let's take a look here. So basically, this green one is from the halving, the same amount of time from the halving. Where was the previous bull run heading, and how much it was heading up at that point. So as you can see here, actually the previous bull run, which had considerably less money than today, was slower than the one that we have now. And yeah, but it's very hard to predict these things because even if they're a lot more money, it's very hard to predict the adoption rate. And I believe that what happened last year was very important because the network effects, yeah, are hard to predict in terms of the price action. But last year was crucial, and we talked about this in a few videos, and actually videos from last year. We had a lot of events there, but if I remember correctly, I might miss a few right now. But for example, Brian Brooks, the former head of OCC, gave a green light for banks, for example, to hold cryptocurrency. Well, that's huge, right? PayPal was the a big institution which started to provide the crypto services, and recently actually they added the possibility, they will add the possibility of retracting your coin to other wallets, because right now you could have only bought and sold on PayPal, so you couldn't have moved your crypto to another wallet. But now they announced they will add this possibility. So um, we had oh, and of course everybody's talking about central banks digital currencies, and if you remember the videos that I had last year, actually in November or October, I mentioned at that point that you will hear a lot of discussions about central bank digital currencies after China launched, because they launched this since last year, right? In a controlled or a smaller release. But of course, like in software, you have to do small and frequent releases to adapt. But I told you that at that point, you will hear a lot of discussions over from different countries saying that they will be studying the possibility, blah blah blah, and they are looking into it, and they are considering it. And I told you that from that point on, there was no doubt. Central bank digital currencies are happening. There was no doubt about it. That's it. It happens, and you will see, and you have seen the narrative change throughout the time. And yes, of course, it's not necessarily cryptocurrency. It actually is not cryptocurrency. It will be centralized by the governments. It will be still factored to inflation and a couple of bad stuff. But in the end, it's a good thing, because it's some people still perceive that as cryptocurrency. So that's a good image, or the boost of image for crypto in general, because to some degree crypto has won this, right? Has won the discussions that states are considering creating their own version, crypto version, digital money, whatever. So that's a big win from my perspective, right? So that's probably contributed to this faster rise of Bitcoin and crypto than the previous cycle, which was actually much less money than today. We almost reached 2.6 trillion dollars, something like that. But it is interesting to see that, for example, so there are a lot of people that are considering that diminishing returns for Bitcoin, and of course not only that, but the fact that some people think that the cycles of Bitcoin will be lengthening. And yeah, of course that is a possibility, but I see a lot of people looking at some charts and trying to create some logarithmic how do you call it, floor for Bitcoin with the previous points from the past that touch it like this, and the diminishing returns something basically all of the previous points touch this logarithmic up channel, and then even this one touched it, and basically that they are saying, okay, but this might be ending the bull market because that's the diminishing returns. Okay, of course it is a possibility, but one thing that I want to add here is that, well, yeah, this is indeed faster than the previous cycle. So now, if you can see here, we're basically kind of in the same point of the previous cycle, because we went faster up, but we went to a similar point in time right here. So we might just see the case, because of course if you have a more dramatic move upwards, like in physics, like in nature, it will fall more than if it were going to go slower or not as high, right? So it's a strong reaction to a stronger upside movement. So it's a strong reaction to the strong action, right? So we might just see something like this. Well, we reach something and consolidate for a while, maybe a V button or something like that, and move upwards. Why am I saying this? Well, first of all, related to the logarithmic graphs that some people are trying to associate with Bitcoin, I believe that, from my perspective, this is the most relevant chart that you have to look at, right? Stop trying to create other charts or create other diminishing returns, other graphs, or based on math and stuff like that. Well, not, of course it has to be based on math, but I haven't seen other models that actually takes into consideration the halving events, right? It doesn't take into consideration the halving events, and I believe that people are really sometimes are so underestimating this halving event, because what happens each 4 years, complexity doubles and the number of Bitcoin produced is smaller each day after the halving event, until the next time, which happens again. So that, of course, miners, because there are a lot of them, some probably accumulate a part of the Bitcoin, but most create a daily pressure of sell on the market, because they have to sustain their business, because you cannot just buy a computer now and mine Bitcoin, because it's not profitable. You need a big, very big hole with a lot of mining machines to be profitable, and basically you need to also get the money to sustain your costs. So they sell daily. So this is creating a daily pressure on the market, sell pressure, and that basically that pressure is having each 4 years. And added the fact with the adoption rate, with the networking effects, of course you will have strong movements upwards. And I don't think other mathematical models that I've seen so far with just adding a logarithmic chart like this is necessarily better than the stock to flow model. I believe that if we this is the most accurate we have, and I'm going to look at it. And yeah, it is also factoring in diminishing returns, right? So for the moment, I'm gonna take this more seriously than other models. And of course, you can see here, even in this stock to flow, compared to the previous cycle, this was faster. And basically, we're reaching a point similar to this one here. But I don't believe this is the end of the bull market. So we have some indicators on the chart. People are panicking with, as you can see here, this is the 200-day moving average. People are panicking because they're saying, okay, it's closed. The first time it closed under the 200-day moving average. This the first time it happened, or in previous bull markets, every time this happened, it produced a it was the start of the bear market. Okay. First of all, and there's another indicator with two moving averages that were actually creating a how do you call it, a death cross or something. So a bearish trend. Okay, first of all, I'm not a very big fan of moving averages and stuff like that, because they're very laggy indicators, and the fact that you are correlating with the previous cycles, right? You are correlating with the previous cycles and saying, oh, but Bitcoin never did this in the past, or whenever it did this happened. Okay, but to that degree, this is the first time Bitcoin did some other stuff, right? So it's the first time, not the first time, but for example, compared to 2017, it was happening faster, right? Well, by the way, we also had this week of accumulation pattern here, which not accumulation, week of pattern. Sorry, give me a second. But basically, if you need to read this, because this guy was born in 1873, and he studied the markets in the late 1800s, and he actually observed that pattern is happening when there are institutions who want to manipulate to get more out of the market or make more money. So this is, if you look at the Bitcoin chart, it's exactly this pattern, and some people actually managed to see this, but didn't believe it will happen. So yeah, it's hard with TA, but it's very nice to see this from time to time, to see how some things are actually happening to this accurate degree. But what I'm saying is that if there was some sort of manipulation here, it also adds up, because it's the market is kind of confused right now. There are a lot of people scared. If you look here, the greed crypto free greed index, it's really bad in the terms of extreme fear. And if you look at the max, you are here. It's very few times in history we were that low, actually, when was the crash in March 2020. So the fear is real. And I can say that of course it wasn't easy for me as well. If you see this, because this was a kind of violent dip, if you think about it, and it was the first or the biggest in this bull market. And of course people that were here and caught previous bull markets in crypto have PTSD, and they're thinking, okay, this is it, we missed it, this is the bear market, we are doomed and stuff like that. Because people are afraid of a multi-year bear market, and that's understandable. And to some degree, of course, this is what I fear as well. And it wasn't very easy for me either, but I'm controlling these emotions and sticking to my strategy, because as I said, there are some indicators like this with moving averages and stuff like that, and Bitcoin didn't do this in the past, and I'm not very convinced from that perspective, because we have the week of accumulation, or the week of distribution. How do you call it? The week of events and phases. Okay, the week of distribution. Which kind of shows market manipulation. We also have the stock to flow and other on-chain metric, because I am a bigger fan of on-chain metrics than TA, if I were to be sincere. And we have a lot of indicators, for example, Nupal. And yeah, there are some, you can make some arguments here as well. But whenever in the past we had reaching the blue area in the grid, we probably had a top, when actually we had a top, even a local one. And I told you that to some degree I was looking at this possibility. If you look into my previous videos, this looked more like 2013 than 2017, because we were heading faster up. And what happened in 2013? We had two peaks. We had the one in June, and well, not a bear market, but I consider that a bigger correction in between, or in the same bull cycle, or whatever you can call it, a mini bear market inside the bull market. And I told you that we might have experienced this, and probably this is, from my perspective, this is a big chance for what's happening now. I don't believe this is the end. I believe this is probably something related or closely related to 2013. So it's not 2017 like, it's more like 2013. And yeah, we didn't quite catch this blue, and this is where I told you that there might be some people arguing to this degree, because okay, I was actually looking to see if we get in the blue zone, and if you watch my previous videos, and that was my one of the things that I was watching for. And if you can see here, one argument would be that each cycle we go a little bit lower in the grid area, even 2017. And now we actually, when we were at top, we were very, very close. I mean, to 0.75. It's maybe we shouldn't even consider that it didn't reach that area. So maybe this is the first peak. The market is different now. It has more money in it, and more crypto, much more crypto than 2013. And I told you in one, I'm not sure if I published that video or made it private, but I had some concerns when I saw Dogecoin and others crypto that hasn't absolutely no value. Well, that mania starting with people buying whatever they see on the market, right? And that usually marks the top. Well, I didn't. To be sincere, I was still expecting more, but probably that was the local top that we are looking for. However, I wasn't looking only on this chart, because I already thought about having this possibility of having this top, but I was also looking on other indicators. For example, this one, 2013 was it reached here with the thermocap, and okay, it didn't reach the red area, and if you see, the peaks are coming smaller. I was looking forward to having a peak right here for the first top, so it didn't happen, right? So there are other metrics that actually don't make sense from an on-chain perspective. So it might actually be part of the manipulation that was showed by the Wyckoff, but distribution. But that's what I'm saying. I don't see all of the on-chain indicators, or a lot of them, are not showing us a top or something like that, and it's not usual to have something to have like this. Well, of course, it's the same argument. You can say that while it happened in the past, it won't happen here. But I believe that the on-chain metrics are a little bit more stronger, or combined with the trading, with the technical analysis, better than looking on only one of them. And even if we look on the exchanges, we didn't reach similar to this one, right? We didn't the withdrawals or even deposits. Well, we are far off from the previous one. So there are a lot of indicators, on-chain indicators, that are not showing something like that. And if you and one thing that I was also looking about in to see how whales are reacting to this dip. So if you see here, according to fresh data from on-chain monitoring resources Glassnode, I wanted to look that on Glassnode, but apparently my account is not showing my last data, so I have months and months in delay. So on these addresses and indicators, and that's why I had to look in the other parts, because it's too expensive to it's too expensive to have that type of account. But looking at this, according to fresh data from on-chain monitoring resource Glassnode, at current levels, old hands are adding to their Bitcoin stack, while recent buyers continue to sell them. So basically, people that have recently entered the bull market with all the hype when it was very high priced, of course they panic, because they bought and 50%, they lost 50% or more if they went into altcoins in a few days, right? And they panicked and they sold. The classic weak hands to strong direction is nothing new, but this pace is increasing. Miners too are back to buying, reversing a brief cascade of selling which accompanied the first dip to $30,000. This chart is insane. Popular Twitter account Lark Davis responded, highlighting the sense of excitement among long-time market participants, as you can see here. So it's take that into consideration. Weak hand are selling, strong hand are buying, right? So this didn't happen the last top. Even the old hands were selling at that top. Now it's not. They're accumulating. Take that into consideration. And also, we have this article. Bitcoin whales holding 100 to 10k Bitcoin have accumulated 30k more coins in the last week. The accumulation coincided with last week retest of 31k and rejection of $40,000. Earlier today, Bitcoin dipped to 33 before launching back to 36. All eyes are weekly. So this is again showing what's happening with the smart money. Well, they're looking at the inverse head and shoulders, whatever. But basically, to some degree, I believe that this is fishy in terms of how we have we'll have this event where Bitcoin actually did a very strong dip in a bull market, and usually that, or from a TA perspective, that marked the beginning of the bull market, and mostly because of the moving averages, which I'm not a very big fan of, and then people are really panicking around the moving averages and stuff like that, which it's I don't believe it will happen from that perspective. So and the on-chain data shows some bullish factors, and the trading, the TA shows some bearish patterns. So basically, the market is quite confused right now, and I've seen a lot of hardcore crypto people and Bitcoin people that are kind of, well, of course, most of them are traders, and they're not touching their long-term holding portfolios, but they're bearish on the trading portfolio. So from a trading perspective, on a short term, probably that makes sense, but I wouldn't sell my Bitcoin or crypto right now, but that's just me. This is not financial advice, and of course there are people with much more experience than me, but this is how I see it at this point. And let's consider something else. People are looking at these moving averages like it's that's really important because Bitcoin blah 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 in the past, but consider the fact that Bitcoin actually evolved a lot in the last decade, right? So there are a lot more money now in Bitcoin. It was more than $1 trillion, and it will probably, as the market evolves, as the adoption evolves, the market will react differently. The market will behave differently, right? And well, S&P 500 is kind of a reach in terms of how it, as a comparison, because it has 33 trillion or something like that. But well, it's a start to look at. But what I wanted to say is that, okay, this is the 200-day moving average for S&P 500, right? So we have a lot of times where it closed below on a shorter time frames, and then it just moved up. Well, I'm not sure if this they don't have a bear market here. Well, it just has, let's say, of course there are some crashes in the past, but it's not a cycle thing necessarily. It's just a very big sell-off, and then it resumes the multi-decade bull market, right? So maybe we should start considering at one point that Bitcoin can do something like this. And if I think about it, the last dip that we had has more similarities to the dip from May last year, from March last year. So it's more related to that than to 2017, the end of the top. And as you can, even in the past, when, for example, let's look at 2018. This is 2017. Look here. If we the end of the bull market previously coincided with the crash at the stock market, 11%. Some people say it's not related, but I believe this was I believe this probably was the thing that cascaded to the end of the bull market in the previous cycle. So probably not only this, it also related to DXY and the power of the dollar, also the inflation rate. And for example, 2018, this is where it started to recover, right? Not sure if this is I still believe it has a way down. So it's still an indicator showing that it shouldn't be the end of the bull market, right? So from my perspective, I think that we're closer to a scenario with Bitcoin from 2013, where Bitcoin had a mid-cycle mini bull bear market. So I still have faith that this is not the end. I don't know exactly how much time it will take to recover, but looking at some things that I see on the market, I believe that we will have an interesting summer, because there are a lot of very good projects in crypto which will have very bullish news in the summer, including Cardano, Polkadot, and I see some Very nice news related to Ripple and SEC lawsuit, because they lost something. They lost the defense on the fair notice, or the strike. Basically, SEC were saying that they had enough. Ripple was saying that they didn't have enough fair notice, considering that they were handling from more than 8 years and nobody from SEC mentioned anything. And basically, they won that argument, because SEC was trying to go in the other direction. So that's a big news, and we might see some interesting movements there as well. So I believe that we will have an interesting summer, and or maybe end of summer, or beginning of autumn, whatever, because I don't think this is the end. So this is my opinion on this. Of course, it was brutal, and I understand the panic and the sentiments here. One thing that you have to remember is try to write down or to remember how you felt here, because in times like this, whenever you feel so stressed out, so fearful, it might be the best opportunities for actually buying, but people are so fearful that are not considering that opportunity. I talked to people 1 or 2 months ago. They were all they all wanted to buy in at those price level, which was quite up. Now they're afraid to do it, right? I don't understand that, especially with all these narrative of the multi-year bear market coming over the corner, which I don't think it's here. It will come probably, might even not come if this market evolves into something like S&P 500 with a multi-year bull market with corrections in between. But this is my opinion, and I hope this was helpful for you. So thank you for watching. Please hit the like button, share with your friends, and see you in the next one.